Hi everyone, this is Mish, Chief Strategist of marketgauge.com with a follow-up now that we have the GDP numbers to be looking at, which of course were better than expected but not as good as last quarter. Consumers still chugging along, labor market still relatively strong, although we did see a little bit of a hit on jobless claims, and inflation numbers continue to fall. So some of the camp is okay, Fed can lower rates, and some of it is why should they? Everything is working just fine. And so the dollar took a bit of a bounce, probably in a little bit more defensive nature, but still very much in the range bound that we've been talking about. Looking at it against the yen, I don't see very much other than an inside day. And some of the areas of support continue to be areas of support. You know, if we look kind of like just at the candle body today, we had the open at 147.48 and right now the close at 147.78. So essentially we had such a little teeny range between the high and the close, but what we could say right here is that 147 to 147.50 is going to be your pivotal area. And of course, if we take a look right here at the next area that we were looking at yesterday, we were taking the low from this day, which is 147.83, so kind of right in that range, and we were saying above it maybe more positive, below it maybe more negative. So now that we have an inside day, we can actually look at it just a tad differently. Could be another dull day on Friday, could be fireworks. So what you want to look at is the outside day. When you look at the outside day after an inside day, you want the high, which would be 148.38, to be taken out to a continued move upside, or the low 146.65.1 to be taken out to the downside, to be looking for more follow through to the downside. And that in and of itself right there gives you close to like a $2 range, which is pretty big for this in general. So there you go. I wouldn't necessarily look too much into it other than the fact that the momentum, as I was telling you about yesterday, in the dollar, even with the pop, is still to me flatlining, sitting on that 50-day moving average in somewhat of a negative divergence to price. So if we had to take a guess and the dollar weakened tomorrow, it would be a move, maybe let's start with first under today's low at 147.08, then a move under yesterday's low, which is 146.65. And then from there, we would be looking at maybe the first level of support at around 146.20. And now we have gold, another day, another range, another chop. I mean, not much to say here in the gold market. That 2020 seems to be kind of pivotal. That's an area we've been talking about. So let's use that as our kind of baseline. Above 2020, we like it, although of course we still have to get back over that 50-day moving average, which is just slightly higher here at around 2030. So between 2020 and 2030, we would have a bias up. Above 2030, even more positive. Below 2020, as you can see, where gold futures have been heading right now, we're having some support down around these lows. Today's low was 2004. The low this day was 2004 as well. So actually, 2004 is a good number for us to keep an eye on if we can't get back through that 2015, which is where it's closing, or even above that 2020. And then at 2004, if that breaks down, of course, then we might be thinking that gold needs more of a correction, and that's when we start taking a look at a break of 2000 down to around 1980. And the momentum hasn't really changed very much. We did have that mean reversion, as I was telling you. So now it becomes a matter of really holding on to this low, which we did. And now you can see we're back above that Bollinger Band after going going up and then down, testing it with a slight improvement in momentum. So, you know, again, I'm still relatively bullish in gold, but aside, much more interested in this point in the silver futures. And I think I mentioned this to you yesterday. And the reason why is because I believe that if silver actually really does start to outperform gold, we got a new conversation to be looking at. Here's your silver market, and that of course that would be more of an inflationary scenario when silver outperforms gold, especially when we take a look at oil, which we will in a moment. So here's silver. Here's back to another mean reversion at the same time now that we did have a reversal at key support at $22 an ounce. So just keep an eye on another market here. It's closing, I think, pretty well, all things considered. Right now, trading at about 22.97. At one point, it was over 23. So let's say that 22.97 down to 22. We'll call it 88, so between 22.88 and 97 is an area of support. Below, maybe we go more negative. Above, I would look more positive. And again, based on this momentum, I'm anticipating that we could see silver ultimately get back up to 23.75, and then we'll have a fresh look up at 24. So this is oil. Very nice move, and one I hope you guys were prepared for, because we've been bullish in the oil market. And of course, look how beautifully technical this is, in that depending on what chart you look at, it went to the 200. If you look at USO, by the way, it's actually above the 200, which is interesting. So the cash market right here is not necessarily keeping up. But more importantly, we're through that 74 level, which is where the 50 was. Now that's going to be our ultimate support. And our pivotal level really would have to be around 75.50, which is also close to today's low, which was 75.60. So as long as we hold 75.50, 75.60, it's very possible that we'll take a run up to this 200-day moving average tomorrow. Maybe we can look at something a little slightly higher than that, 78.10. That would be quite the move. It would also maybe spook a lot of the shorts into getting into the market. I do not believe at this point people are fully convinced that oil is going higher. On the momentum basis right here, you can see we got through all of the moving averages, so it's actually having a bullish divergence in that it's over the 200, over the Bollinger Band, but this is the zero line, and this is a very important line as well, and we're right there. So one more push gets this momentum up, gets this price over here, gets us back to around that 78 level, and then of course our next conversation next week probably will be either it held 75.50 and is now over 78 looking to go higher over 80, or it's below 75.50 and it's been another big never mind. A very wrong assumption is to think that if inflation is going to come back in any real way, that it also has to be in the natural gas market or in a lot of different commodities. Actually, we could see it reflected in obvious certain commodities that might be impacted because of supply or because of weather or because of geopolitics, like an oil market. But it doesn't necessarily mean it has to extend to everything. And clearly, when we look at natural gas, this is a classic example of, ew, it's just really hard to trade. And I've been saying that now for quite some time. So where would I change my mind? I guess the first spot would probably be over 275, and this is the obviously the cash market right here. Over 275, we clear both moving averages, and then if you look over here, we clear all of this where it had its major crash, and you could see when it cleared it the last time, it went all the way up before it came all the way down. So 275, keep that in mind. Above that, I get interested. While it's trading below here, there's nothing really much to see in the way of doing anything other than the fact that if you absolutely love to trade natural gas, then I would take a look at this level right here at 260. Above it, maybe that test of 275, below not so much. Next support really would be, I think, closer down to around this level at 250, and then of course we start looking at these lower levels, which I would only get involved if I really felt that there was a fundamental reason, number one, and number two is that the momentum was continuing to show some kind of bullish divergence, which it still is because the 50 is above the 200. However, momentum has come down. We really want to see the momentum clear the 50 at the same time the price, and the reason why I say it's bullish is the 50 here is considerably higher than the 200, where here it looks like we're actually about to have a death cross, in which case that could put natural gas into a bear phase. And lastly, we'll take a fresh look at SPX, although kind of like what we started out this video with, talking about USD, JPY, we're just getting an inside day, which could be conceived as bullish, clearly, because look at the momentum. Although the momentum is up above the Bollinger Band, it isn't quite as high as it was when the price was a little lower, and I think that's something to keep in mind on, but I have not seen any reason to think that we're reversing just yet. But of course, we're always on the lookout. One, of course, would be some kind of a huge explosion to the upside, what they call a blow-off top. That would have to be met with high volume. We're not seeing that. The second would have to be some kind of candle reversal, which would mean after an inside day tomorrow, we take out this low of 4,865.94 and continue to go lower. That would make this maybe a powerful top, but that has to happen. Otherwise, we could also easily take out the top, which is 4,903.68. So that's really the way we got to go. We got to look at this outside range, just like I showed you with the yen dollar. Under 48.65, maybe things get to be a little bit dicier. Above, then maybe that trip to 5,000. And if we do go below, by the way, then we would have to be looking at around that 4,800 level. That's a huge area of support. And then we could take it from there. If it's going to be some kind of a disaster day, then we could see this breakdown under 4,800, but I wouldn't necessarily think this thing is going to crash. If anything, I would say it might just correct and hold until the Fed meeting, which we have next week. But 4,760 would be your next area, I think, if we break 4,800. Momentum-wise, like I said, not as high as the price was here. When the momentum was higher, the price was only at 4,768. So we're like $120 higher than that, and our momentum is worse. So that may be the biggest heads up. Anyway, that's it for now. Hope you have a great day. Thanks so much for watching. Happy trading. Have a great weekend, and bye for now.